back to Bloomberg Markets Asia. I'm Haslinda Amin. Let's get right to Markets Asia. Still managing to garner some gains despite escalating tensions in the Middle East. Iran sending a barrage of missiles at Israel. Traders now watching for further headlines. Worth noting, VIX hovering at a key level, suggesting more gyrations may be coming to markets. The MSCI Asia Pac Index up 0.6%. Worth noting, Hong Kong shares in particular looking past that U.S. election debate, also looking past escalating tensions in the Middle East, jumping almost 6%. We have developers in particular doing gangbusters right now. Take a look at the BI China Developers Index, up more than 20%, 27%, in fact. In terms of Brent crude, trading up by 1.3%. It was spiking at 5% at one time, but now tapering to 1.3% for Brent crude. New York crude up 1.5% despite escalating tensions that we're seeing, supply concerns playing out in the market. Also, the U.S. vice presidential debate. U.S. vice presidential candidates Tim Walz and J.D. Vance have wrapped up their first and potentially only debate just over a month before Election Day. A key focus on issues including immigration and foreign policy amid the escalating Middle East crisis after Iran's retaliation against Israel attacks in Lebanon.
Diplomacy is not a dirty word, but I think that's something that Governor Walz just said is quite extraordinary. You yourself just said Iran is as close to a nuclear weapon today as they have ever been. And Governor Walz, you blame Donald Trump. Who has been the vice president for the last 3.5 years? And the answer is your running mate, not mine. Donald Trump consistently made the world more secure.
This issue of continuing to bring this up, of not dealing with it, of blaming migrants for everything. On housing, we could talk a little bit about Wall Street speculators buying up housing and making them less affordable, but it becomes a blame. Look, this bill also gives the money necessary to adjudicate. I agree, it should not take 7 years for an asylum claim to be done. This bill gets it done in 90 days. Then you start to make a difference in this, and you start to adhere to what we know, American principles.
All right, let's get more analysis with Bloomberg chief political correspondent Anne-Marie Hordin in the New York spin room. Anne-Marie, a little bit of sparring, a lot of stability. I mean, great difference for that presidential debate. What are the key takeaways here?
Yeah, absolutely. A ton of sparring. I will say, as compared to the presidential debate, there was a lot more policy actually on this menu. And even at times, it was very friendly between these two Midwestern men, these two running mates. And even at moments, they agreed. So potentially, whoever wins, maybe there will be some bipartisanship in 2025 in Washington. I'm glad now to be joined by the co-chair of the Trump transition team. He's also the CEO of Cantor Fitzgerald, so he's a name that's very well known on Wall Street, and of course that's Howard Lutnick. Thank you so much for joining.
Great for being here.
Let's just start with, what did you think of this debate, and do you think it could move the needle, given the fact that it is just the running mates, it's not the top of the ticket?
Well, I like that Walz just kept agreeing with J.D. Vance. For a while I thought maybe he's going to vote for him. I mean, he was agreeing because J.D. Vance really was clear. He made his policies clear. It's very straightforward. He cares about the workforce and the working men and women of America. And I think that's what came through. He basically said it over and over again. I understand them because that's who I am. I understand the workforce because that's where I came from, and Kamala Harris hasn't done it yet. Why is she coming up with these ideas now? Why did she go visit the border this week? Like, why didn't she go visit the border when she became the border czar? Do you remember when she became the border czar and they interviewed her and she said, I've been to Europe?
She became the head of investigating the components of migration. And then some individuals.
No. She was the border czar. Some
people called it that, but the job of it was to look at the root causes of migration.
The root causes of migration. The root cause is if you open the border and you say go to these cities like our city and you get free housing and the mayor gives you $10,000 each. Everybody wants to come. So you can't open the border and let everybody come. It just doesn't make any sense. What are you going to do with these 20 million people that have come across? They're just harming our country. We've got to do something about it. It's fundamental to the economics of our country. Our citizens need to have jobs that are good. You can't have illegal immigrants just taking their jobs. It just doesn't make any sense.
Border crossings are down right now, but I want to ask you about the
Down
economy.
compared to what? To
Down-
be
down where
incredibly
they were
high?
December, they were very drastic, and they are down now, and the president has actually used some executive authority. But I want to ask you on the
Exactly
economy.
what Trump said.
I want to ask you something on the
Okay.
economy, especially where you sit in the private sector. What can we expect from the president to come out in the next few weeks as he wants to drive home this agenda on the economy? Because right now, when you look at polling, he is still winning when it comes to the trust factor on the economy, at least in our polling. But Kamala Harris has been able to really nitpick away at that advance and that lead. And so you start to see some of those independents shift towards her. So what message do you think he's going to drive home specifically about the economy?
His key is that his economic policies are going to put Americans back to work. That's the key, to make this a manufacturing economy here in America, to stop shipping those jobs overseas, right? The idea, the economists had 30 years ago that somehow we'd ship our jobs overseas and everything would be cheaper for us. It's just not true. Our workers need jobs, they need manufacturing, they need their mines back open, they need their farms to be able to sell overseas, right? We don't have, think about it, every country in the world protects their farmers, except for us. We let everybody sell against us, and our farmers take the wrong side of it. Everybody is taking our jobs overseas, and no one is protecting them. So cut the corporate tax rate, make manufacturing here cheaper, right? Make it cheaper to be here, and then let's build here. And that's the difference, right? Bringing that corporate tax rate down makes jobs come to America. It's not theoretical. It's jobs in America, and that's vital. And tariffs protect us against the Chinese and protects against cheap labor attacking our workers. Doesn't someone have to protect our workers? That's what Donald Trump wants to be.
Let's talk about the tariffs then, because you ended there. Donald Trump has been proposing 60% tariffs on Chinese imports and a 10% tariff ring around the United States. Do you think that these are blanket tariffs almost immediately if he were to win? Or is this something he would do incremental, say 2.5% for 24 months?
I think he's studying and he understands how to work it, which basically is tariff for what we make or want to make, and don't tariff what we don't plan to make. So that basically,
So it's not a blanket.
No, it's unlikely to be blanket because it's likely to be really, really smart. I mean, that's the idea. You got to stop China. First off, we have to stop China. The 60% on China is totally sensible, right? Because they dump like solar panels, right? They make the solar panels. People talk about the Green New Deal. China makes the solar panels, charges half the price that we would make them here, puts everybody out of business, and in come the solar panels. And when Governor Walz says, oh, they make solar panels in his state, they buy the parts from China. I mean, give me a break.
So you'd be tariffing the parts, because there actually also are some narrow targets right now from this administration on, 100% on electric vehicles and some also solar, because they did see dumping on the market. So would you say there'd be tariffs on the inputs of some of these products?
Of course. If China makes it, there should be tariffs on it, right? And because we need to build here. And you know what? Is it better to tariff and have other companies across the world pay taxes, or to charge Americans higher taxes? I mean, think about the idea that someone has a problem with that. It just doesn't make any sense. In the early 1900s, we didn't have income tax. We just had tariffs, and we were the richest country in the world. Why do we think we should tax Americans and not tax these other countries? Let's put tariffs on. Let's use the money to reduce our deficit, or it's a win-win, employ our workers and have a better America. I mean, I think this is vital, and I don't know where this went away. I just don't understand why people don't understand how great tariffs can be to protect America and to earn America a lot of money as well.
Well, because almost every economist you talk to says they're inflationary. So are you concerned about the inflationary impact tariffs could have?
All right, here's my favorite example. The number one country on this earth who puts in tariffs is China. They have the most tariffs and the most trade barriers, and they have deflation now. So why, if that were true, why doesn't China have 50% inflation? because it's not true. It's a theoretical
Well,
argument.
they have government subsidies that makes a lot of products very
No,
cheap.
It's theoretical arguments to make globalization better. And I get it. When people are trying to make a whole argument together like a big pizza, they take the cheese, they take the tomatoes, they put everything together. The fact is, tariffs are an amazing tool to protect American workers and to earn America a lot of money. We've got deficits. We need to bring them down. Donald Trump, think about this objective. He's going to bring Elon Musk in to help with efficiency. I think Elon Musk thinks he can save us $1 trillion of waste in our system, just absolute waste in the way we purchase and the way we do things. Donald Trump reduces our deficit to $1 trillion. He saves $1 trillion. Congratulations. Donald Trump actually can balance the budget in the United States of America. And right now, we have a $6.5 trillion budget under Harris. $6.5 trillion budget, $2 trillion deficit. $2 trillion. This is just wrong. Balance the budget. Give a chance to Donald Trump. He'll drive down the cost of energy. He's going to make America great again, because how can you argue with making America great again? I just don't understand why anyone would argue.
We have to leave it there, but I will say I think it's the first time I've heard someone talk about deficit reduction in the spin room. That's Howard Lutnick, CEO of Cantor Fitzgerald, and of course the co-head of the Trump transition team.
Anne-Marie, thank you so much for that. Again, Bloomberg Chief Political Correspondent Anne-Marie Hordern there with Cantor Fitzgerald Chairman and CEO Howard Lutnick. Well, still ahead this hour, our exclusive interview with the chairman of Chinese kitchen maker Carote. We discuss the outlook for the company after today's successful Hong Kong listing. Keep it here with us. This is Bloomberg. Several things, not just that VP debate that we just saw, but also escalation in the Middle East, as well as China's stimulus package that we saw last week. Let's bring in Omar Slim, co-head of Asia Fixed Income at PineBridge Investment. Omar, good to have you with us. As we speak, we have the Aussie climbing, Kiwi climbing, and we have a surge in Hong Kong stocks. This on the back, of course, of what China did. I mean, what's your reaction on the kind of sentiment that's being sustained from China's moves we saw last week?
Yeah, I think it'll be interesting to see how long it will be sustained. I think what's interesting about these measures, one is that they seem to be more comprehensive than what has been done over the past 4 years, even though clearly the market was asking for it. Two, there were some surprising measures, particularly when it comes to sustaining the stock market. And these were explicit, which was never done before, at least not to that extent. And the third, the way I would describe them is I think they are meant to stabilize the economy, to kind of try to ease the pain when it comes to the China property market specifically. I don't think they're meant to kind of re-energize the economy in a major way, because if that's the intention, I think more needs to be done. So I would qualify them as stabilizing as opposed to kind of revitalizing.
Right. So it remains to be seen how sustainable those measures are. On the other hand, we're seeing pressure perhaps coming from the Middle East, escalation in the conflict that we're seeing there. Yet, when you take a look at risk assets, they're not reacting in a mega way. Take a look at oil, for instance, spiking 5%, now just up 3%. And it's just not the kind of reaction one would have anticipated.
Yeah, the reaction is quite muted. Geopolitically, I think that's probably an inflection point. But in terms of the market impact, I think the market probably is a little bit complacent, thinking that this will continue to be localized and focused in terms of a few countries, some of which are not that market impactful. We've seen some movement in some of the Eastern bonds, for instance, but not in the grand scheme of things. For instance, treasuries barely moved.
7 basis points, now 3 basis points.
3 basis points. So I think there's probably a bit of complacency, but I think the market assumption is that it will be local. I think if it doesn't, then you can see a stronger reaction. But still, I think broadly, the market focus is elsewhere. The market's focused on the US elections. The market focus is on the Fed and monetary policy.
So how do you see the bond market moving from here?
Well, I think that's really the main question that the market is focusing on. I think there is a little bit too much priced in when it comes to the Fed in particular. So I think absent the noise in terms of geopolitics and risk aversion and so on, I think the Treasuries rallied a little bit too much from my perspective, and I think the messaging from the Fed has been consistent with saying recalibrate. If you see how many times he uses the word recalibration and adjustment over the past month, I mean, it's quite telling. So I think there's probably a bit too much that's priced in, particularly for next year. So I wouldn't. I think there could be a bit of a backup in terms of yields, particularly towards the long end. And one of the areas I think which the market is focusing on quite a bit is on the fiscal trajectory, particularly of the U.S.
How important is the data right now? It is a data-dependent Fed. We saw that surprise data out of the U.S. We're keeping a watch on the jobs data coming out on Friday. Might that move the needle for the Fed?
I think it does, particularly the fact that now they seem to be kind of splitting their focus, if you equally, in terms of what the job market is doing and what the inflationary trends are. So as long as the inflationary trends allow them to focus on the job market, I think the focus will be increasingly on the softening job market. So the short answer is yes. I think particularly when it comes to the labor direction in the U.S., I think that's quite important.
So what should be the positioning? How should your portfolio be looking like? Any changes you've made of late?
Yeah, I think in terms of duration, one of the things that we like is we think that there's a bit of a steepening bias for the curve. I think that's a trade that should work well, particularly the fact that the fiscal seems to be heading in a relatively negative way in terms of the U.S., regardless of the U.S. elections. So that I think will play out in the long end of the curve. And I think there should be an active duration management, and I think there's a bit too much priced in right now.
All right, Omar, we'll leave it there. Omar Slim, PineBridge Investments. Plenty more ahead. Keep it here with us. This is Bloomberg. Welcome back. China on holiday, but Chinese stocks trading in Hong Kong having a fantastic day, lifting the benchmark in Hong Kong. The Hang Seng surging more than 6%. Right now, each stack up almost 9%. The Hang Seng China Enterprise Index climbing as much at 6.5%, and that property index surging as well. That's, of course, on the back of the stimulus package, which China unveiled, and that's prompting the developers index in particular to go, well, can I say this, gangbusters up almost 30% right now. It is quite a ride for those Chinese stocks trading in Hong Kong. For more on the market, let's bring in Bloomberg M-Line strategist Mary Nicola. That's quite a run.
It's been an impressive run. I mean, but if you think about it, just everything that we've seen from the government, the stars are really aligning in favor of Hong Kong stocks or anything China related. So not only do you have the fiscal support, but you also have Fed stimulus and you've Fed easing. So it's a combination of what's happening on the global side, but it's also what's happening in China itself. And now it just looks like everything is favorable for them, and investors, of course, are looking for opportunities. And for Hong Kong stocks specifically, they've got valuations on their side, so it gives them a little bit more upside.
Would you say that it is a fundamental shift in terms of investor sentiment? We know that not too long ago, the likes of the hedge funds were saying, you know what, we're not going to play China.
Absolutely, and you've seen that. So you've seen some of the underperformance that you've seen in Asian equities has been as a result of the fact that you've had so much investors who've been underweight China, and now they have to deal with short covering. So where do they find their positions, and how do they cover their shorts? They look for other places, and what has done really well. So you've got the likes of Taiwan, Korea, even India. So you're looking for opportunities from on that side, locking in your gains and looking for opportunities elsewhere, and that's where the China story comes in.
So looking for value, if you take a look at the China universe, we've seen fantastic gains for property developers, for instance. Where else is there value to be had?
Yeah, a lot of the Hong Kong stocks are still okay. So let's say the Hang Seng Index, that's still doing well from a valuations perspective. It's still a lot cheaper than a few of the others, the CSI 300. It's cheaper than MSCI China. So there's still further upside upside there in terms of where it's coming. And then if we look at a chart over like the last 5 years or so, you still see that there's a lot more traction and a lot more gains to be had for some of these equity markets, because we have to remember how bad things were just not so long ago for a lot of these equity markets.
The thing is, when China was uninvestable, investors took money out of China and put it into India. Could we see a reversal of that? Could we see investors pulling money out of India now putting it back in China?
I think so. I think the fact that you've seen the underperformance in Indian stocks over the last week or so, and since we've seen the gains in China, I think you can see a lot of that transition. Because remember too, Indian valuations are really expensive. So you have to be comfortable with the fact. And of course, the Q2 earnings weren't even that strong. So if you look at that combination, you start thinking, where are the other opportunities and where can I get a better value for my money?
Speaking of opportunities, investors are trading against a backdrop of rising, concern in the Middle East. How might this play out? I mean, which asset classes are likely to benefit?
Yeah, you still have a lot of the haven assets that are likely to benefit. So dollars likely to maintain some sort of bid, treasuries as well. Gold will still be in the limelight.
But gains so far have been pretty muted. It is kind of surprising.
It is, but I think also they're just trying to see what happens. We've seen a lot of the cases with the Middle East tensions. A lot of it is a wait and see approach. So you see only the reaction after it happens, right? But I think what happened recently is the fact that you don't know what's going to happen next. So they might be a little bit more cautious, and that's why I think you don't see an acceleration in dollar losses. I think the dollar in that sense will remain relatively stable. Swiss franc is still going to remain well bid.
Mary, thank you so much for that. Bloomberg analyst strategist Mary Nicola. Now, staying with the tensions in the Middle East, Israeli Prime Minister Benjamin Netanyahu has vowed to retaliate after Iran fired about 200 ballistic missiles at Israel on Tuesday. Bloomberg Horizon's Middle East and Africa anchor Jumana Basachi joins us now from Dubai. Jumana, they're talking about a new phase in this conflict.
Yeah, and it seems to be the case day to day, Haslinda. Yet another round of violence in the Middle East. And what happened yesterday is that around 7:30 p.m. local time, Israel reported that 180 ballistic missiles were fired from Iran into Israel. Explosions were heard around the central part of the country. Now, the IDF say that many of the missiles were intercepted, though there are reports indicating that one person has been killed in the West Bank. Though overall, Israel and the U.S. say the damage was limited. But some of the missiles do appear to have hit their targets. And indeed, Iranian state TV is claiming that the strikes targeted important security and military sites. Now, Iran says that this was in reprisal to the killings of Hassan Nasrallah in the airstrike last week, alongside a senior IRGC commander who was also killed in that airstrike, and the killing of Ismail Haniyeh that took place in Tehran just over a month ago. For a while now, they have been saying that they're looking to exact revenge somehow. And it looks as though yesterday's wave of attacks was a representation of what that revenge could look like. They have also warned that another round of strikes could be forthcoming as well. Now, people are going to be quick to draw comparisons between what happened back in April, which was the first direct tit-for-tat escalation that you got between Israel and Iran, and yesterday's attack. And there are two main differences. The first is back in April, the attack was very well telegraphed. This attack seemed to be less telegraphed than it was before. The U.S. only had a couple of hours heads up that an attack may be imminent. The second difference is back in April, Iran was using slower moving missiles and drones. These types of missiles that were used in yesterday's attack were ballistic missiles and seen to be more potent. So the question from here, Haslinda, is how does Israel respond? Some forceful words coming through from the Israeli Prime Minister yesterday saying Iran has made a big mistake tonight and will pay for it.
That's right. Israel has promised to respond. Do we know how deep that response might be? Is there anything we're hearing on the ground?
No, but what we do know is we can take some information based on how Israel responded to those April attacks. And back then, it was reported that the U.S. did exercise a lot of pressure on Israel to keep its response contained. And if you remember, back in April, when we did see the response out of Israel, it also was limited in nature. They didn't target any civilians. They didn't go for any heavily concentrated areas. They stuck to military infrastructure. And so you have to wonder whether this time around they will also go for a more restrained response or go for an escalatory type response, in which case you would be looking at a situation in which the conflict in the region is being waged on several fronts, because it won't just be a hot war with Iran. You also have a ground incursion and ongoing airstrikes in Lebanon. You have a direct tit-for-tat also going on with Houthis. There were airstrikes in Yemen the other day. And of course, the situation in Gaza continues to be one that is very, very far away from reaching that ceasefire deal that the U.S. have been pushing for. So yes, the events in the last 24 hours do pose a significant risk of even further escalation in the region right now.
Jumana, what are we hearing from the international community, the U.S. in particular, about what's transpired and how the conflict in the Middle East has worsened?
Yes, well, the U.S. were very quick to, number one, point out that they are fully behind Israel's right to self-defense. They actually aided Israel in intercepting some of the missiles that were fired last night. Reports indicate that they took down about 8 of the estimated 200 missiles that were fired towards Israel. But more broadly speaking, the U.S.'s role from here has been one of trying to de-escalate the situation, but also to encourage deterrence. And the way that they bring about that deterrence is by deploying more assets to the region. Yesterday, we were reporting that the Pentagon is deploying thousands more troops to the region. We know that there's a significant amount of warships there, too. Some of those F-35 fighter jets are also being redeployed there. And all of that with the view of deterring Iran from potentially what could be an even more potent strike. But at the same time, the U.S. has firmly stood by its ally in the Middle East, that is Israel, and has said quite in no uncertain terms that Israel does have the right to self-defense. And indeed, the U.S. aided Israel with intercepting some of those missiles yesterday.
Great reporting as always, Jumana. Bloomberg Horizons Middle East and Africa anchor Jumana Basechi in Dubai. Now, still come on the show, shares of Chinese kitchenware maker Carote surge in their Hong Kong debut. We speak to the chairman about their business outlook next. Keep it here with us. This is Bloomberg. Chinese kitchenware maker Carote rose as much as 64% at its listing debut in Hong Kong Wednesday, reinforcing perceptions that the city's IPO market has sprung to life. The company, the first to list in Hong Kong since Chinese appliance maker Midea Group's $4.6 billion debut. Joining us exclusively is Carote's chairman and chief executive director, Chang Guangdong. Chang, good to have you with us. I mean, surging as much as 64%. What do you make of that debut? Chang?
Yep, sorry. Pardon, I didn't hear you.
Yeah, surging as much as 64%. What do you make of Carote's debut? Are you happy? Is it up to expectations?
Yes, certainly. Thank you. So actually, we have been a manufacturer over 2 decades, and we have a lot of experience that working with brands and retailers. And today we become a brand retailer online ourselves, and we sell cookware around the world. It's already 7 and 8 years journey for us. And luckily today we are listed in the market.
Right.
So
well, the IPO
Carote is a
was...
very...
The IPO was 1,300 times oversubscribed, and that interest continued today when it listed. I'm just wondering, why do you think there's so much interest in the company?
Well, I think the market is positive. We are very optimized about the markets. And also we have a quite a lot of very good long-term investors supporting us.
Do you think China's stimulus package, which we saw yesterday, is also boosting interest in your company?
Yes.
What do you think that might do for China's economy?
Well, we have been in China. We started our brand business in China. It has been 7 years, and I think we are a very large population market, and also we have a very large market for the kitchenware category. So I do believe there are still a very potential opportunities as long as that we offer today the new products, very best value and innovative products to the market. The consumer groups that we have, they are significant, young, and believe in the new brands, new products. So yeah, I have to say, market is large, and there's still a lot of opportunities.
So talk to us about the opportunities. How does that feed into your growth strategy? What are you intending to do?
Okay, I think the very important, the last 2 decades experience that we have built up, we have passed through, help us to understand about the kitchenware market. And secondly, we born the brand business from online, and which is a very open market, fair for us to be free to offer the consumers. And we talk to the end customers directly, no matter which market they are. And I think the most important is to understand the consumer insights. And by providing the numbers, data, and also merging our experiences, we believe in that which is significantly important for us to understand the consumer in every market about the characters of and also their demands. Kitchenware is a really large market. The most important for us is to offer the innovative products to them. So I think that's the key driving us continue the growth in the market.
John, the plan is to allocate 30% of what you raise to acquisitions. Where are you planning these acquisitions?
Well, I think there are really a lot of opportunities now in the market. We have been in the market for myself have been in 16 years. And we do really like looking for opportunities like some great brands. They have really historical brand awareness in the markets. And we can add value to them, and also they can add value to us. So we can have common goals to offer the same the innovative products to the market. So I think we are quite flexible looking for great brands in the category, offering different products to comparing to ourselves.
Right. Just one follow-up question, John, before you go. Plans for the U.S.?
Sorry?
Any plans for the U.S. market?
Absolutely. It's a great market. We had really fast growing during the last 3 years in U.S. market. And we have also got 7 years ODM production in U.S. And it's a very diversified market, a lot of different culture mixed. So I think for us, very important is to understand deeper and deeper by different consumer groups in a market based on the cooking experience and understand different portfolio about the market. Yes, we are very optimized about the market.
Right. Zhang, thank you so much for that. Carote Chairman and Chief Executive Director Zhang Guangdong. Now, here are some of the top corporate stories we are following. Bloomberg has learned that Boeing is considering raising at least $10 billion by selling new stock. Sources say the plane maker is looking for ways to replenish cash reserves depleted further by the ongoing strike. However, the share sale isn't seen likely for at least a month as the plane maker struggles to assess the financial toll of the walkout by 33,000 workers. Boeing is on the cusp of seeing its credit rating cut to junk. Billionaire Gautam Adani's flagship firm is said to be planning to roll out its share sale as early as next week. Adani Enterprises is looking to raise over $1 billion through a so-called qualified institutional placement. The share sale marks the group's return to public equity markets after a scathing report from short seller Hindenburg Research in 2023 derailed a previous plan. And Nike fell in after-hours trading as the world's largest footwear company withdraws full-year guidance. Nike is seeking to reset expectations before incoming CEO Elliott Hill takes the reins later this month. The company reports revenue in its fiscal first quarter has fallen 10%, just short of the average analyst estimate. But Nike's gross margin and sales in China have exceeded expectations. And another story we're following, Apple is said to be preparing to announce a new low-end phone early next year, alongside upgraded iPads. Sources say it's nearing production of an updated iPhone SE that will become its new entry-level model. Apple is also aiming to manufacture new iPad Air models and keyboards for release around the same time. Plenty more ahead. Keep it here with us. This is Bloomberg. Taking a look at some of the benchmarks here in Asia, take a look where the Hang Seng Index is right now, surging 6% as it comes back from holiday. Of course, we have property stocks in particular lifting the benchmark given the stimulus package, which we saw from China, trying to reverse the slump in the property sector and also to boost its economy. The Nikkei 225 back from lunch down about 1.5%. Losses too for the Kospi currently down by 0.2%. And taking a look where we are in terms of Samsung shares, managing to be in positive territory right now, up about 0.5%, despite sources saying thousands of jobs are set to be eliminated at the company. For more, let's bring in our tech reporter, Annabelle Drewlers. Belle, what else are we hearing about the layoffs?
Well, we're getting, of course, details around the geographies that these are going to be happening in. So we're not talking about layoffs that are happening in Korea. We're actually hearing about reductions overseas. And you think about Samsung's workforce, actually more than half of them are outside of Korea. They've got about 150,000 staff or just under abroad. And the markets where we're hearing about these job losses, so it's Southeast Asia, Australia, New Zealand, about 10% of the workforce in those places could end up being affected here, though that number could vary a little bit between the different subsidiaries and the different markets. But we are hearing that those layoffs have started. For instance, one of our Bloomberg colleagues was speaking to someone in Singapore in particular, and they were saying that on Tuesday, so just yesterday, staff were being pulled into meetings with HR, their reporting managers to share details of their severance and their retrenchment packages. So yes, that headcount reduction happening at the overseas subsidiaries in particular.
Well, we've heard Samsung has laid off other staff recently too, Belle.
Yeah, this is according, again, to people that are familiar with the situation here, but we're hearing that, again, there were some eliminations recently of staff or staff positions that were cut in India, some parts of Latin America as well. It is important to reflect on the positions that are going. So we're not talking about manufacturing jobs, for instance. We're talking about management and support functions. These are the ones that are being most affected. It is a very interesting moment for Samsung as a company. I mean, we've talked about sort of some of the labour issues it's faced this year. We've seen the first ever strike being called by its biggest union in Korea. We've also seen shares declining. I mean, you can see that drop there of more than 20%, and this is with Samsung really struggling in key markets. We know, for instance, that it's behind in the HBM space. HBM is high bandwidth memory chips. Samsung's a laggard to SK Hynix in this area in particular, and they're crucial for powering AI tools. We also haven't really seen Samsung making any progress or real progress in its foundry businesses yet, and this is where it wants to compete with the likes of TSMC. So certainly some challenges ahead. Those headcount reductions are the focus for today.
Bloomberg tech reporter Annabelle Drulis with a developing story. Well, in the markets, it looks like Hong Kong is having a moment in the sun. Take a look where the Hang Seng Index is right now, continues to climb, currently surging past that 6% mark. HS Tag having a rally as well, higher by almost 9%. And of course, it is the property developers in particular climbing today. That's on the back of the stimulus measures which China released just last week in an effort to reverse the sentiment in the market as well as its economy. Take a look where we are in terms of the BI China Developers Index, surging about 30% right now. We're also keeping an eye on developments in the Middle East, taking a look where we are in terms of those haven plays. Oil at one time surging about 9%, now up by 1.3. Gold retreating about 0.5%, but still close to record highs. In terms of the 10-year yields, currently at 3.7410. Traders, of course, watching those headlines out of the Middle East. That is it from Bloomberg Markets Asia. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.